Today, you can discover a whole new side of Snapchat.
With a possible $25 billion valuation, legions of millennial users, and an ongoing buzz in the media, Snap Inc., the parent company of the disappearing message app Snapchat, may seem to have all signs pointing to success for its upcoming initial public offering. But despite all the positive, there's one constituency Snap has yet to win over, and it's an important one: Wall Street investors. The Wall Street Journal's Corey Drebush and Maureen Farrell report that ahead of the company's pitch for the IPO, investors are taking a sober look at the numbers. Among the concerns, a slowdown in daily user growth, fierce competition from competitors such as Facebook, and the implications of near total control that Snap's founders have after the IPO.
Stories are a collection of snaps that play in chronological order and expire after 24 hours.
Nearly a dozen fund managers and analysts across the U.S., including several who focus specifically on tech, say they found Snap's regulatory filing made on February 2nd frustrating and disappointing. But it isn't unusual for prospective investors to try to find faults with the company ahead of a deal, to evaluate their interest, or even push bankers to lower the initial share price. After reading through the filing, many investors are concerned about slowing user growth, particularly since the popularity of the Snapchat social messaging platform has been a top justification for the company's valuation. Snap had on average 158 million daily active users in the most recent quarter, a 3.3% increase from the previous, but that's compared with daily active user growth of 7% between the second and third quarter. However, Snap also has things going for it, like scarcity, for example. According to DealLogic, 2016 was the slowest year for U.S.-listed tech companies since 2009 in terms of number of deals and dollar volume. That factor alone could help support the shares in their debut. However, some investors are also balking at the fact that co-founders Evan Spiegel and Bobby Murphy currently hold about 89% of the voting shares. If either founder dies or is incapacitated, according to the prospectus, the other could control nearly all the voting power of the stock. Some investors say they're put off by the structure, saying they don't know the co-founders well enough to entrust them with so much power. That said, there's often skepticism ahead of major IPOs. Even Facebook, whose shares have soared in recent years, faced skepticism at the start. Its shares fell below the offering price soon after trading began and only moved above it over a year later.